3 trades today, 1 win, 2 losses. I began the trading session up $2,500 and finished it down over $7,000. And here's the frustrating thing about it. I fully was aware of what I was doing at the time when making those 2 bad decisions, but I decided to do it anyway. Let me show you. Today began as planned on the 4-hour chart of Euro USD. I created the range for New York time. My first candle closed completely so I could draw my lines using that. Then I went down to the 5-minute time frame and watched price push up to the high of the range, close above it, and continue to push through the high of the range until it created another candle. I waited for that candle to close. When it closed, it was back inside the range. That was my short signal. Price went up through the high of the range initially, grabbing all those buy orders that were placed above the 4-hour range by traders looking for a breakout. When price reached the high of the 4-hour range and created a clean close above that level, it was rejected back down into the range. That is called a stop hunt. This was a failed breakout and it was textbook. My MACD was negative. The momentum had already turned down and the setup was pointing down. So that's full confluence. My entry was on the close of this previous candle with the stop loss at the high of the breakout, and I was targeting 2R. So as we can see, Euro USD fell aggressively without hesitation straight down and it hit my target over $2,000. Easy trade, nice way to start the day. Then I switched to Bitcoin and this is where the day started to go in a completely different direction. Not because the setup was bad, but because of something I had already knew before I even started. The 4-hour range was marked as usual, so I'm on the 5-minute chart of Bitcoin, and as we can see, it went underneath the bottom of the range, closed below it. Then the very next candle closes back up inside the range. That's a long signal. So as usual, I check my MACD to confirm and both are positive with momentum moving up. So at that point, every box was checked. Then before I entered into the trade, I glanced at the daily chart, and smacking me right in the face is a huge level of resistance. Bitcoin had been rejected from this area multiple times in the past. Now I'm considering entering into an area or zone that represents resistance. My entry would be right here on the close of this candle, stop below the low of the breakout, target at 2R as usual. So as you can see, Bitcoin moved up a little, tapped that daily resistance level I was talking about, and came straight back down. It didn't even hesitate. Price broke below the low of the breakout and I was out. That's a nearly $3,500 loser. And to make matters worse, Bitcoin created the setup again. So we are on the same 4-hour range and price broke the bottom of the range again and closed outside the range and then came back inside. So this is another long signal. The MACD was once again positive. This is the same exact setup that stopped me out earlier. At this point, I should have done one of two things. I should have either avoided this trade completely as the context hadn't changed, or at the bare minimum, sized down considerably as I was still in a drawdown for this session and the context was against me. I did neither of those things. I used the same size, entered on the close right here, stop loss at the same place as it always goes, and I aimed for a 2R target, which I never changed. I think part of me wanted to be one of those who proved that this resistance level was wrong. I had seen this setup work so many times in the past that I almost convinced myself that this time would be different. So as you can see, Bitcoin pushed up again, hit the same resistance zone and came right back down. Stopped me out. That was a nearly $7,000 loser. So for the session, I was down over $7,000. A winning morning turned into a losing day entirely. And of course, this is the reality of trading. So the big thing I continue to process is that today I wasn't blindsided. I took a hit because the risk was clearly evident. The 5-minute setup was in direct conflict with the major daily resistance level sitting directly overhead. But I thought that the 5-minute setup was more sound than what the higher time frame level was telling me. So I chose to proceed with the trade without factoring in any of those risks. And when using a lower time frame for trading, you need to understand that the lower time frame chart does not exist in a vacuum. A lower time frame trading chart or setup as going up against a large resistance in the higher time frame is a compromised setup. I don't advise beginners to trade those things. It's either you skip the trade altogether or trade the compromised setup with a lower position size. They don't always fail, but they don't always work. I didn't follow those guidelines either time. At first, after losing on Bitcoin, the move was to either reevaluate my position size and assess whether the current market context still existed, or to close the trading platform for the day. Doubling down at the same price, at the same size as I did before, after having been previously stopped out, that's not having confidence. That is just stubbornness disguised as confidence. By the way, if you're just getting started with trading or you're trying to find a good broker, I use Exness. They have fast executions, low spreads, and you can start an account with as little as $10. The link will be down below and help support the channel. So the link will be in the description and in the pinned comment. Also remember, knowing the the risk and taking it anyway isn't bravery. It's just a more expensive way to learn the same lesson.